Triple TVKE across all your social media platforms. Hashtag business at M21460 your SMS line. You're still watching Metropole Television. This is your economic review. Let's get into the other issues therefore. Now, the government's failure to pay millers in 2017 under a maize subsidy program has seen 2.7 billion shillings in accrued interest pushed to taxpayers. Data indicates that as of 2017, 2.3 billion was owed to millers, an amount that has risen to 5 billion as of this year in a principal and interest, with the government having paid only 3 billion to 5 millers, with 2 billion shillings being an outstanding amount for the remaining 4. Now, the 9 millers contracted by the Ministry of Agriculture to import and sell maize to the state under the subsidy program 3 years ago to lower the cost of flour that had hit a high of 150 shillings for a 2-kilo packet, have claimed that they took loans to get the maize, pointing to the financial implications this has had on the businesses over that entire time. All right, let's really look at where we are in terms of importation of value and quantity of maize into the economy this morning. And we're going to put a special focus on the year 2017. Now, in terms of value, you can actually see the biggest year in terms of importation of value was in 2017, the year in question as well. All right, let's talk about the quantity as well. Look at that in 2017 as well. That is the year in question, where we do know that we were at risk of a 2 kg packet of maize jumping to 150 shillings. Good. Now, this morning, to help us put that data into proper perspective and where this case is coming from and why the government would just not pay despite the millers coming in for it in 2017, we do have Mr. Kenneth NYAGAH, the chairman, United Grain Millers Association. Mr. NYAGAH, good morning. We're happy to have you around.
Morning.
All right, now let's get into that. Can we comment on this case, Mr. NYAGAH? Because it looks quite a surprising case that from 2017 to date, the millers haven't been paid, and now that bill, which was just 2.3, is 5 billion. Mr. NYAGAH, can you hear me? Can you confirm whether you can hear me? Yes, Mr. NYAGAH, can you hear me?
Yes, I can hear you now. I'm sorry.
Fantastic. Let me just go back to that question again. Can we get your general comment on exactly why this would remain unpaid from 2017 to 2020, on especially a year that the government went to the millers for help because they were unable to contain the price of maize flour in the country?
Okay, thank you very much for having me. This issue of maize subsidy has been a real issue.
Yes.
It happened in 2017, and basically the big millers were actually involved in this. And I remember vividly well that when government came up with this subsidy,
yes,
we, as small and mid-scale millers, we were not actually involved in the importation of maize, but the big millers were involved in this.
Yes.
Nevertheless, the maize actually prices and shot up so much. And I remember in this, actually during that time, we used to get maize from Ethiopia. And the maize was going for almost 3,800 to 4,000 shillings.
Yes.
So this is where the government decided to come in, because the consumers were really on government. And I remember us having a meeting with some of the top government officials, and government came up with a plan to do the subsidy. What the subsidy means is basically they buy the maize, the government would provide us with the maize, but at the end of the day, I know the exchequer would have been forced to cough something. And this is actually what happened. So this one was done by the big millers. But at the end of the day, what really may be a problem here is how that money had to accrue interest. All in all, I know very well that the government had to put something. Sorry. Hello, can you hear me?
Yes, we can hear you, sir.
Yes, the government had to put in some money, at least to offset the balance between they were actually doing it. They were giving us with the 2,300.
Yes.
But I know by then the maize had gone up to around the 3,400 to 3,500. So there was that difference that the government had actually to offset. Two, this maize that we were milling was solely owned by the government. If you can remember very well, the prices was 90 shillings per 2 kg. And we were told strictly we earned actually to stamp it GOK, showing it's a government of Kenya initiative. So what I cannot really be able to tell is what kind of arrangement they earned with the big millers, so that the government would buy the maize that they had imported. I know with the little knowledge that I have that this thing has really been a big problem in the ministry.
Yes.
Especially knowing that there are some people even who are taken to court, and actually there are some court cases pending. But what I can really say about this is, okay, it's quite one thing that I don't understand is why this money and to reach to a point of even accumulating interest when it should have been paid actually that year, so that we avoid now the issues of interest, which is a lot of money.
Yes.
I know as
Mr. Nyaga, if you may, just for the sake of time, so we'll address another issue again here this morning, because it's neither here nor there, as the government, as Watu government did not actually pay this money in 2017. Somebody would ask you, we've been struggling, Mr. Nyaga, to really contain maize prices in the country, and especially flour prices in the country. Would you talk to me? Last year, there was this headline about how the Ministry of Agriculture had cancelled importation licenses for all the millets into the country just to get a foot on the prices of the country. Has that been renewed now? Can you import?
Oh, okay.
Mr. Nyaga, can you get me, sir?
Sorry, I have a problem with the audio. I can't hear you at times. At times I can hear you.
Yes.
But just to answer on what I've heard you saying, I know from last year the government stopped the importation actually of maize. And according to the CS, I remember the CS, Mr. Munya, he called us for a meeting.
Yes.
And he told us that the government will not involve itself in the business of buying maize.
Yes.
Now they want to leave this actually to NCPB.
Yes.
And the millers, so that they can be able to manage this sector. So I think to us is also a relief, because this is an area that had been penetrated so much by the cartels.
Yes.
And we feel if it is left between us and NCPB, then it would be manageable. You'll find at times some of these things were actually, how do I put it? They were actually brought in by cartels so that they may be able to benefit of their own thing.
Yes.
As we never time, and this other time to actually allowed to import. So I think I would really congratulate the CS for the decision, because this has been a big issue. Not actually, they would import maize at a very low price, and when they come
Yes, we seem to have lost Mr. Nyaga on that, and we seem to have been having difficulty this morning. We apologize with the quality of that conversation. We shall promise to get him back so we can talk about the political climate and that area in the country as well, because that is what we promised in the conversation. Meanwhile, a new survey by PricewaterhouseCoopers has indicated that a third of jobs are at high risk of being displaced by automation by 2030. According to the survey, about 55% of people are worried about automation or other innovations taking their job, while 60% think fewer people will have stable long-term employment in the future. Now, the World Economic Forum Forum has already indicated that more than 133 million people will require new career paths by 2022, as 75 million roles will be in decline. This morning, to put that conversation into proper focus, we are joined by Peter MWENDA, who is a HR manager, CIC Insurance. Mr. MWENDA, how big is the risk for job automation as a driving factor in job losses, and how far has the COVID-19 pandemic pushed the world economy to automation?
Good morning. Can you hear me?
Yes, we can, sir.
Yes. Thank you very much for having me here this morning. I would say that for sure, many Kenyans that I have interacted with, I have seen on paper, they are so worried about the future of their jobs. Already, we know that over 1 million Kenyans have lost their jobs since the COVID pandemic invaded this country. What is interesting is a survey done by Deloitte in 2018, where they were talking about the future of work. And at that time, I remember looking at the trends, the human capital trends at that time. It appeared like the future was very far in 2018.
Yes.
But actually, the future took us by surprise in 2020, because even after being warned that the future is coming, I don't think there was any organization that was ready for it the way it came. We have seen automation now. Of course, a few organizations have taken this step of automating, having decentralization of how work is done, and having people work away from their usual workplaces. But they had not rolled out that arrangement or that plan across. So immediately COVID came, many employers started procuring machines and tools of work to help people work remotely. And I think the future is actually ahead of us. I would say we were dislodged by the future. The present was knocked down and knocked out by the future.
Yes.
So we are now living in that future we have been talking about.
Mr. MWENDA, somebody's going to ask you, I mean, from what you're saying this morning, which sectors and industries will be completely affected by automation? And should we be talking about jobs augmentation by tech or complete replacement? There are people who are arguing, well, even as we lose jobs to automation, there will be jobs that will be created by automation as well. Where is the balance?
What will be affected quite a lot is where people are manual.
Yes.
Where employees, workers are using manual systems to work. I can say without fear of contradiction that those will be obsolete. Those will be completely replaced.
Yes.
The augmentation of machine will replace those positions.
Yes.
Because the employers have actually, I interacted with one of the employers, an entrepreneur who told me that while people are crying because COVID has affected their lives, I think I have a reason to look at my business differently, because I was made to realize that I can work with few people and make money. Initially, I had, in fact, half of my workforce went home, and with the kind of people, with the number of people, are making money. So there are positions that they are jobs by their very nature that will be completely replaced, and those are the ones that are using manual system.
Yes.
The machines have also created jobs, or the automation has created jobs, where and you will realize that while other organizations are suffering, allow me to quote Safaricom. Safaricom sold more data during the COVID, and therefore they made money from data because of the pandemic.
Yes.
Because many people bought data so that they can work remotely. Initially, they didn't have. We saw a lot of people installing home fiber and other internet systems so that they can be able to work. So people who have expertise around technology will actually have opportunities. So organizations now will stop having rigid organizational structures because of the fluid nature or the jigs of these structures. They will no longer be applicable because many people now have realized, actually, I can work at the comfort of my bedroom, at the comfort of my sitting room,
Yes.
without having to go through the trouble of traffic to access my usual workplace.
All right, Mr. Mwendo, just as we clear this conversation for the sake of time this morning, that point that you mentioned there, the decentralization of labor, like I don't have to go to work, I don't have to work 9 to 5 at my company now. What opportunities exist in that area, and how does one position themselves for that? And if you may quickly on that, is there any investment that any robust economy can make now so we take advantage of the future of work?
Thank you very much. I think the opportunities I see in that decentralization of labor is where employees will stop signing permanent and pensionable contracts.
Yes.
And say, I can sell my expertise in 5 organizations. I will work here, I sign this contract with this organization A, and then I sign another one with organization B, C, D, and E, and work like 2 hours in each of those organizations as long as I'm delivering. And of course, I will make more money. I have 5 employers. And because it is so flexible that I will not feel like I am in a prison where I must appear physically. So that is the opportunity I see. And people are going to sell their expertise, and that is where they need to invest in lifelong learning to be relevant in that space.
Pretty much, Mr. Mwendo Peter, thank you very much for taking your time to speak to us here at Metropole Television's Business, and we do appreciate the little time that you put aside for us this morning.
Thank you very much and welcome.
Right, and on that note, as usual,